Hello, I'm Finola Burke from RaaS, and today we're focusing on energy producer and explorer Empire Energy Group, ASX ticker EEG. And Empire has the largest tenement position in the Macarthur Basin in the Northern Territory. Joining me is Managing Director Alex Underwood from Empire Energy Group. Welcome, Alex.
Hi, Finola. Great to talk.
Great to have you. Now, you've announced some significant developments this past week, positive testing data from Carpentaria 2H and a major resource upgrade from Netherlands Sewell and Associates. How does this change the commercialisation profile of the project?
We are very excited about the results we've put out in the last week or so. There's been a series of announcements, starting with flow testing data out of Carpentaria 2H, our first ever horizontal well in the Beetaloo Basin. And then also we announced a very significant resource upgrade independently assessed by Netherlands Sewell and Associates. And this week we conducted a very successful AGM and we were delighted to share some of these updates with our shareholders. Just going through those in order, about a week ago we announced flow rates on Carpentaria 2H. That well was flow tested for a total of 127 days. Over that test period, it produced a total of 323 terajoules of gas. This is a rich gas that has been confirmed over multiple tests now. And also we've confirmed that it's an extremely low CO2 gas. To put that 323 terajoules into perspective, this was a 927 metre fracked horizontal section. When we move into full field development, we'll be drilling 3 kilometre horizontal wells. And so an equivalent well over that 4-month period in the development phase would produce about a petajoule of gas. At a notional $10 gas price, which is a pretty conservative assumption, but a nice round number, that would be around $10 million of revenue in the first 4 months of a development well. And we expect in the pilot phase these development wells to cost around $20 million. And then over time, as we move into larger scale, these wells should come down to about $15 million. So to be in a position where you could be recovering a significant chunk of your development capital in only a few months, we believe is a very, very positive indication that we can move into commercial development. Not only have we seen really encouraging flow rates from the Carpentaria 2H well, but also as a result of last year's highly successful drilling program that also entailed the drilling and fracture stimulation of Carpentaria 3H, our second horizontal well, and also a vertical well, Carpentaria 4V, Netherlands Sewell has reassessed the contingent or discovered resource base within EP 187, and they've upgraded that from around 400 BCF of gas, which is about 450 petajoules, up to 1,739 petajoules. This is a very, very large discovered resource for a company of our size. To put it into perspective, Beach's Otway project is about 500 petajoules. And also I note that the Carpentaria project is only a very small percentage of our overall basin profile. That's about 110,000 acres of contiguous area. If you look at our Western Beetaloo properties, we have over 1 million acres of equivalent acreage on that side of the basin. So we're incredibly excited that not only are we seeing flow rates, but also incredible potential for running room in terms of moving the project forward. And that's why we've described it as now having LNG potential scale.
And Alex, you also had on the LNG front, you also had a change of chairman this week with Paul Espy retiring and Peter Cleary stepping up to the chair. And Peter has some background in that space. Could we talk about how that may help the dynamics going forward?
Absolutely. So at our AGM, Paul Espy announced his retirement. We are very grateful to Paul for his leadership and guidance over the last 5 years. It's been an absolute delight working with Paul. He's brought a very strong corporate reputation as one of Australia's real business leaders. And under Paul's leadership over the last 5 years, we've gone from a standing start, a company that had a really messy balance sheet. We've built a team, we've built a board, and we've been what I would argue is the most active and successful player in the Beetaloo Basin over that period. So we're really grateful to Paul for his service to our company. Peter joined our board a couple of years ago. And Peter is a highly accomplished and respected business leader within Australia's oil and gas sector. He spent 24 years working at BP. During that period, at one point, he was actually seconded into the Northwest Shelf Venture as its president. And in the last 5 years of his executive career, he was on the leadership team of Santos. Peter has been a very valuable and respected and collegiate member of our board over the last 2 years since he joined. And we're very excited that Peter has agreed to step up into the chair role. If you look at Peter's career, Peter is a leading figure in LNG. So he, in those corporate roles, he marketed and sold gas into North Asia. He sits on the advisory panel of Diamond Gas International, which is Mitsubishi's LNG marketing business. And also he has very, very deep relationships into South Korea and Japan. We see that this is a very exciting development for our company because while in the early phases, our plan is to get into pilot production and provide gas into Australia's domestic market, ultimately the scale of this resource affords itself to moving into LNG export in the years ahead. And we believe that Peter's relationships into North Asia provide us the opportunity to really springboard into those larger aspirations.
And Alex, what part of the process now has the highest risk for delay? I mean, is it approvals, supply chain, government policy? Where do you see the risks there?
Yeah, so as we detailed to our shareholders at the Tuesday AGM, we are now as a company very focused on moving EP187, which we call the Carpentaria project, into pilot production. If we succeed in this objective, we would be the first player in the Beetaloo to move into commercial production and sales. There is, however, a lot of work that we need to do over the next 6 months or so to approach our board to seek a final investment decision on that pilot project. So at the operational level, we're working on front-end engineering and design and the field development plan. So essentially working out how many wells we'd need to drill, what the surface facilities would look like, how to design the compressors, how to fit this gas production into the pipeline. We're then in commercial negotiations with a number of highly credentialed parties in relation to gas sales and also working on a gas transportation agreement. So essentially hooking our gas production into the McArthur River pipeline under the existing MOU with Power Water Corporation. There's a very extensive process ongoing in terms of working with the traditional owners with whom we have a great mutual respect to move from an exploration phase into a production phase. Also, we would be putting in place our environmental and technical regulatory approvals. And ultimately, as we pull all of those things together, then looking to finance this project, it's a big focus of mine is not only moving into cash flow, but also doing it in a highly net asset value per share accretive manner. And what I mean by that is looking to move into production in a way that minimises equity dilution to our shareholders. So we have an existing credit facility, a quite small one with Macquarie Bank that has the potential to grow into a project finance facility. There's the potential to sell down a portion of our assets to fund any equity contribution. And we'll be working through all of that this year. So we have a number of things on the go at the moment. And really we're looking to pull all of those together so that next year we could be in the construction phase of the pilot project and then looking to move into production, most likely, early 2025.
So, Alex, you did mention the final investment decision, which you're hoping to do later this year, and you have talked about not needing additional capital between now and that decision being made. But have you done any early scoping on the capital requirements for the proposed pilot plant and early production? And could you share that with us at this point?
Yeah, certainly. So I do want to stress that as a company, I'm always very focused on being very careful stewards of our shareholders' capital. And when our new board was formed, we as a company developed an internal policy that we should always keep a certain minimum amount of cash on the balance sheet. And the reason for that is that irrespective of the results you achieve in the field, there are lots of macro circumstances that can affect your access to the capital markets. I'm very pleased that not only have we been ensuring we keep a minimum amount of cash on the balance sheet, but also with our work programs last year coming in significantly under budget, we announced at the AGM that we have over $16 million cash in the bank. We also, the new Macquarie facility is completely undrawn. There's capacity to draw up to $10 million under that facility, which would be repaid out of R&D tax rebates for last year's work that we would expect through our tax return later this year. So we are in a very solid position where we do not need to approach capital markets to carry out this work towards FID in the near term. And that allows us not only to not worry about the capital markets, but also to really put our heads down and focus on these value accretive activities. We are going through a range of scenarios right now in terms of what that pilot project looks like. Essentially, the limiting factor on how much gas we can produce is the capacity of the McArthur River pipeline. That's up to about a 25 terajoule a day opportunity. To put that number into some perspective for your viewers, at 25 terajoules a day and a notional gas price, again using a round number of $10 a gigajoule, that would be around $90 million of revenue a year. Obviously, you would need to deduct off the royalties, which could be somewhere in the order of 10% from the NT government and payable to the traditional owners on whose land we operate, and then a relatively modest amount of operating expenditure. But that's sort of the general scale of the revenue opportunity. In terms of what the capital cost would be, it is a little bit early to really nail down numbers, but essentially what we're looking at is a handful of additional wells, could be 3, 4, 5 wells, somewhere in that order, as I mentioned, at around $20 million each. And then the surface facilities, which could be $20 or $30 million. So it's probably somewhere in the $100 to $120 million range, but you know, it is early days and that should just be taken as an early indicative guide. But I would stress that, you know, the plan is absolutely not just to go out and raise $120 million worth of shares on the market. We think we can do this in a highly capital efficient manner, because when you're producing cash flows of the order that we believe, with a gross revenue line of $90 million, that does afford itself to some much more capital efficient sources of capital than just issuing further equity.
And more generally, what impact has the firming of the Code of Conduct and full adoption of the Northern Territory regulatory changes had in terms of gas buyer engagement? And is that interest extending beyond the Northern Territory markets?
Yeah, so it's been very interesting, some of the regulatory developments in the last month or so. One development that I was very pleasantly surprised by, but that the market didn't really pick up on, was the federal government announcing that there was an exemption from their market interventions for what they refer to as small producers. A small producer is a company that produces up to 100 petajoules a year, again, using sort of revenue terms, about $1 billion of revenue a year, so a long way above our pilot project scale. And that's for companies that are feeding gas into the domestic market, which is our pilot project intent. The market actually didn't take a great deal of notice of that. And yet, very shortly thereafter, the NT government announced that they were giving the green light to the Beetaloo moving into production. That was an announcement that I was less surprised by, despite it being a very, very positive development, because of the incredible amount of work that the Northern Territory government has done over the last 5 years to give effect to the Pepper inquiry, and the very strong statements of support for this industry from the senior leadership of the NT Labor government. That announcement by the NT government really, if you look at our share price chart, was a real turning point in terms of investor confidence. Our share price is up 50% since that announcement, after a pretty tough 12 months, I must say, which I think is reflective of very challenging market conditions right across all markets, given the high inflationary environment we're in. But to your point, it has certainly increased the level of interest from potential acquirers of our gas. We are receiving significant inbound interest, not just for gas in the pilot phase, but also in the second phase of our development, which would involve significantly higher volumes than 25 terajoules a day going into Australia's East Coast market. That would require new pipeline infrastructure development, and we've made some announcements earlier this week about in the AGM presentation about the progression of our relationship with APA Group, who are looking at building a new pipeline to connect the Beetaloo to Mount Isa and then into Australia's East Coast. And across both of those phases, both the pilot phase and that second larger phase, that inbound interest extends to both. So we are focused on getting more gas into the NT market. The NT market needs more gas. Existing sources are declining. And we believe that as a good corporate citizen, looking to help the Northern Territory economy grow, not only should we be delivering royalties to the NT government and traditional owners and all the jobs that entails as well, but also assisting them with their energy security by getting more gas into the NT market. But also that interest from purchasers is also extending very much into Australia's East Coast. And, it's frankly not much of a surprise. If you look at spot prices at the moment, we saw Wallumbilla spot get to $20 last week. I was reading in the Fin Review earlier this week that Sydney got up to $30. These are prices that hurt everyone. Anyone who's, using gas in their home, they're paying high prices. Electricity bills are going to have upward pressure on them. Manufacturing and industrial businesses will suffer. But also it's fundamentally inflationary. So all of us who have mortgages, and I'm certainly one of them, every time we pay our mortgage, that's part of that's being driven by inflation, and more gas coming into the system will drive down inflation, support jobs, and ultimately, sustainable economic growth.
Well, Alex, thank you so much for your time today. I'm looking forward to checking back with you through the course of 2023 on the progress of Empire Energy Group.